feels to me, Pierre, that a key question on everyone's lips is exposure to China, particularly when we have the macro data coming in thick and fast that's on the weaker side.
Yes, as a rule of thumb, the semiconductor industry is exposed 20-25% to domestic China. And guess what? That is really almost everywhere in semiconductors is exposed about the same to China. So 20-25% of revenues. People talk a lot about it because the setup is very specific for Arm. They have like a subsidiary in China they don't control, and that's their only Chinese client. So all companies in China who want to use Arm technology, license their technology, their IP, have a copyright licensing on their instruction set, have to go through this local Arm company. It has created some difficulties in the past because there is lack of control, lack of auditing of the company, but it's relatively minor in my view. At the end of the day, as long as China wants to use Arm and needs Arm, Arm's business in China is going to look good. But of course, you know what the situation is. China wants to grow more independent from the West, and that's going to be a headwind for Arm. In my view, very slow, very limited impact on how you think about the valuation of the business today.
Okay, so tell us how you're thinking about the valuation. What sort of number are you looking at? What vindicates it? Yeah,
so Arm is an interesting business model. They spend a lot of money on research and development. They come up with great architectures. That's also a standard. The whole industry is using it. So that's really the architectures everybody wants to use. And then clients pay a license fee to Arm to get the right to start working on their IP. And then they pay royalties once they produce chips that contain Arm's technology. And so these royalties really, to me, today, they are not all profits because Arm has been over-investing in their operations to build this base of IP. But going forward, royalties are pure profits. So I like to look at Arm, and that's what I've been doing, when the stock was listed before 2016, as a multiple on royalties. You see that over time, it's a very relevant metric, very stable. It reflects very well the growth outlook of the company. And it has historically, like just before the acquisition by Softbank, it was trading on 6 turns higher than the stocks. And so that's the kind of valuation I'm looking at today. So I'm looking at 2027 revenues for Arm as we model them. And I look at 27 times that. So that gives me like an $82 billion valuation as you enter into 2026. So I find the valuation range today 50 to 54 billion very attractive. It gives you like an opportunity to see 20% per annum return on up to 20% per annum return on the name between now and the beginning of 2026.
2026. It's interesting because I'm fascinated by the mechanics of this. You write in your notes that the range $47 to $51 is attractive to investors, new investors taking advantage of the IPO. But all told, SoftBank's going to hold on to 90% of this company. Why?
Well, because, two reasons. The first one, SoftBank sees in the name probably even more upside than I see. Massa is very, very bullish on Arm's future. So for SoftBank, really, it's not a matter of getting rid of Arm, of like making a profit on Arm. It's more a matter of, after 5 years as a private company, the company has tried a lot of things, have made a lot of investments. Some of them have worked well, some of them have worked less well. And now Arm is at a point in time where becoming a listed company again makes a lot of sense for the company in terms of, being successful, attracting talent, creating the right, like governance setup and management setup. Being a listed company brings a lot of advantages to Arm. And I think it's a very good timing to do that. And then for SoftBank, the idea is not, in my understanding, to exit Arm, but more to have Arm as an additional very liquid asset and an asset on which SoftBank can leverage to actually raise money for further investments. So that's really the way I think about it. So I don't expect, SoftBank to lower their share, significantly lower their their stake in Arm anytime soon.
Pierre, the great fun of a traditional IPO is that it gives the company an opportunity to tell a story about themselves, right, to the world. And the story that Arm wants to tell is that they are relevant for AI. They are going to do great with all of the R&D and CapEx going into AI. Do you buy that story?
Yes, I do, but you have to be very careful to understand it well. I like to qualify that as like an AI diversification. Yes, almost everything that is going to grow Arm's revenues, royalty revenues over the next 5 years is going to be related to AI. So from that perspective, I do agree with your statement. But interestingly, all the AI Arm is going to get exposed to is not like the AI clusters that we see being rolled out today, like the NVIDIA or TPU-based AI clusters. In that part of AI, Arm has actually very, very little, if any, exposure. But in your mobile phone, you need larger chips. You need chips with better IP so that the chip can better deal with AI models and with all these services that are built on AI. And Arm is actually bringing to the market a lot of innovation that is very relevant to that. And in particular, the number one driver of pricing power for Arm over the next 5 years is the rollout of their V9 architecture. So that's a ninth iteration of their instruction set. And the number one innovation that this V9 brings to the market is actually AI-specific instructions. So the next generation of Arm chip are going to do a much better job dealing with AI workloads. And so from that perspective, it's really an AI play, but totally uncorrelated to what's happening today, like the crazy increase in spending on AI clusters, because in a GPU, in an AI accelerator, Arm is between a minimal contributor and not a contributor at all.
Yes.